Good morning, everybody. All right. Do we have the charts up? I think so. All right. So everybody knows the video's out. It exploded higher. Interesting to see what it does from here. Who wants to buy at these levels or not? Anyway, markets are up a little bit based on that, especially the NASDAQ. And they're gapping up into what should be a sell zone area. It was a little surprising. Well, it was kind of wasn't so surprising to get the turn day here. Yesterday was surprising to see such a strong reversal, but I could see the hesitancy to be more aggressive on the sell side without it being near resistance, and now it's near resistance. So that suggests sellers are going to be more comfortable selling in this area, especially after a drop like this and a retracement to price resistance of declining 20. The 50 MA is there. So you got converging moving averages in alignment with resistance. It's up several days in a row. And it should turn. Now, so you see the title of today's slide was internals. We're in middle of the month, end of the month, September. And so what does that actually mean? Well, part of our bias each day is, okay, what's happening today, but intermediate term, what's happening. So when we got the internals telling us it's time to be careful was right around here, right? Somewhere in this area as it started to go up. And then this day was like pretty obvious gap, wide range bar down. Sellers are getting more aggressive, $460. A lot of things came into alignment. So from that point, the thinking was, okay, it starts going down into the middle of the month. It's just, and this is not a prediction on my part. It's just that seasonality. It's just, the way things happen historically. So we just follow these, market internals, technical analysis, some seasonality into market analysis and see how things work out. So give or take the middle of the month, it was a little after, get this exhaustion gap. And now it's coming up into the end of the month, into resistance. So I suspect it's not going to collapse here today. We got the Fed chair, whatever he's going to say, who knows? I just think things will rattle around as we get into the beginning of September. Because most of the time things take a few days for the bullish sentiment to dissipate, rattles around, some kind of turn, which we don't have yet, but it's in an area where that should happen. So we'll see how that plays out in the coming days. We still got today's the 24th, and we've got a whole week of trading, 4 days anyway, and then the holiday. In the beginning of September, and I think that might be more or less where the alignment of maybe things begin to, that reversal happens, so I think the upside at this point is probably limited. I think the downside is probably limited until we get some backing and filling. And so just throwing out a thought as to this week, maybe actually closing with a green bar. What would we look at as we go into that September period with, the little devil, September being the worst month of the year? So what would likely happen is that this week closes green, and maybe next week actually might try to move up a little bit. And we'll see how this plays out, but just giving my thoughts, we get a green bar ignored and a measured move lower, possibly, as a move down. So based on all of the seasonality and patterns and so on and so forth, that could be what plays out as we get into the next month and after the holiday, and which ultimately, as we get thinking about that seasonality, which sets up the end of year rally. I can't believe it. This whole year is like going by. I know it's, only August, but, we start talking about end of year rallies. This year has just been, wow. But so that would be the thoughts as to how things play out in the coming days. So for today, we know prices are gapping up here a bit. They're gapping up into an area where, after moving up several days, sellers will probably try and take hold to some effect. We'll see how much. We'll see how much NVIDIA holds on to its gain or not, and how that might affect. And so before I go on to SPX, look at this, reversal in SMH. I mean, that impressive to reverse a big red bar like that. That was in its converging moving averages. When it gapped up that day, was like, our bias was the sellers were going to be there, and it did, and it reversed this. So this, well, let's see where it is here. It's gapping up significantly. I'm just looking at that now. You can see this because of NVIDIA, of course. And so that's gapping up here. And we got this big trading range now over several months. So that's a positive, so that even though the sellers will probably be up in this area, intermediate term, whatever correction type of scenario plays out into that September period, having these semiconductors coming back up after taking out these multiple pivots, that's a positive. That's a good thing, because whatever corrective action they may have, now, if they can stay above this level, I mean, I'm repeating, but it's a big positive. So we'll see how that actually plays out. Futures, up into an area. It's an obvious place where sellers are going to be. Same thing as SPY. Still could rattle around here a bit. You see what's going on here pre-market. But hey, look, we look to the left. There it is, converging moving averages. Our assumption is there's going to be sellers there. Then we see how it all plays out. Pretty basic, but common sense as I see it. Not so common sense when you start adding all the indicator mythology to it. That's where it gets confusing. So here, SPX, we got a second line there. Let me see if I can click this without moving that line. There's lines on top of lines here. Hold on. Let's see if I can grab that one. Okay. So there's the congestion. It's up here. Prices are up here based on where SPY is. And the bottom strike is 4,400. And there's a big open interest actually expiring. The next option's expiration. The big open interest there in puts. So that's going to be a pretty good floor. And as far as today goes, I'm just looking. Not such a big deal, but bigger open interest than the strikes around it. So, and then at 43.80, which is below that, is another. So, being up here probably comes down a bit. You've got resistance. This should be this. Look, you got a good line of defense. I think that'd be a safe level there on the upside. I think you got to monitor the action in the first little bit to see if things immediately start to roll over. But this should be a decent level as well. I think this one more reliable. No, internals were, I don't know about screaming, but back here, they were saying, warning, Will Robinson, things at this point are lined up where you better be careful with the longs. And then down here is where they said, okay, on the short side, you better be careful because risk on the short side is growing. Now, part of our conversation over this week was, well, we have this lined up to say risk for the short side has increased dramatically. As far as the long side goes, it wasn't such a great situation because one of the influences here that we've talked about was interest rates going up. And what I said yesterday and the day before was, look, the internals are telling us they've reached a bullish level, but this is moving up. What we need to see is these interest rates start to pull back to be in alignment with the internals, the intermarket analysis part, and they collapsed yesterday and markets rallied. And the dollar, which has been going up, and we see that reversed, but it's broken out here. So we need to keep an eye on this into next week to see if it actually begins to rattle around. Does it continue to pull back? What do interest rates do? And so on. So that is what happened back here with internals turning bearish, down here bullish, and then the dollar. Remember, everybody was screaming the demise of the dollar down here, where it was at the bottom of the trading range. It's broken out. So, which leads us all to, hey, what's the Fed going to do? Everybody's, they're going to maybe do nothing. Maybe they will. But, just their comments alone could be, hey, you know what? Maybe we're going to, be more aggressive if we don't get such and such. We'll see. We'll see. Yeah, I mean, so the euro collapsed as the dollar went up, of course. We looked at this yesterday. It's sitting here on the 200. So I suspect, it'll try and stabilize here. You got the bottoming tail yesterday. The pound that dropped, it didn't take out the range yesterday, but, it's been flip-flopping around here. So that's that. And, the Russell didn't participate very much. It's rattled around there. It still might bring up the rear a bit, but if you look at, the influencers, XBI is like a sell setup here, and it's extended lower. So I'm not sure that's going to bring any help to it. And KRE, I don't think I typed that right. KRE, that didn't, had a reprieve day yesterday, but that broke down. So unless KRE can start moving up and the biotechs can do something, and IWM isn't going to do much of anything, and what is it? Well, XLE, and that's kind of been rattling around. So can the oil stocks kind of help out there a bit? Maybe, but we'll see. They're moving down. So I don't see IWM having some support underneath it, that buying demand that makes it something of interest. And look at oil now starting to roll over here. We know what happened to Bitcoin. That makes the next leg down. So again, we've got these moving parts going on here. Market's gapping up a bit, and there's NVIDIA, we know, up above 500, amazing, right? But holding on here for the moment. But as we get into next month and after the holiday, if sellers are going to be more aggressive to push this market lower, and that's the seasonal period where it's most likely to happen. All yours, Dan.
Good morning. Yeah, Q's holding strong here, pre-market. So Alex and I were thinking the same thing about NVIDIA. It's a bullish chart, no question about it, daily, weekly, monthly. But based on the monthly, Climo, long-legged doji, I was thinking there was too much bullishness and just using the sentiment at an extreme that it was going to go down, regardless of the output of what they reported. And I was wrong. Gapping up. So we'll keep an eye on it. I don't see anything what to do with it now. Let's go to earnings trades here. Snow. I gave an unofficial short strangle, which means it's a selling a naked out of the money call, out of the money put, and they were so far away. I sold the 190s and the 130s. So for like $1.40 or something like that. And I'm just gonna bid 5 cents at the open, see if I get filled. VNet, this would be an ideal 1, 2, 3. I like the breakout on the weekly, daily. NTAP was a sell setup at the 2050, gapping down. That's a call spread on a 30-minute low watch. A Zuo gap breakdown, 30-minute low or some type of bounce, target 200 MA. Splunk is up huge. Wow. Look at that. It was a sell setup and it's gapping over all of this, which makes the monthly bullish. But that's gonna take a week or so to settle down and give a pattern. Autodesk, I was considering a short strangle, but I did not get filled. Gap's too big. This one I was going to sell the I forget if there's a 17.5 or $15 puts, things that get killed from the top to the bottom on near support. So that is a monster gap too. Wow, that's what we call a bear trap. Why bear trap? Well, because everyone's still with a bearish view this whole way down is holding a losing position at the market open. Gapping down here, no pattern. Up to that's garbage. Canada stock. This I like. That's a climb on major support. I was looking at this as a put spread, but there was no juice. So that looks good. 30-minute high. Let's watch. Put that in the window. TD, another Canadian bank, gapping down, no pattern. NT's gapping down a little, sell setup, no pattern now. Dollar Tree, I did a naked put in this. Let me see what strike I did. The 122s. So it's a bearish gap, but I still have $11 of cushions for tomorrow. So with 99% certainty, I'm going to have an open profit. So I'll be looking to bid. I'll just wait and see where they open up, because I don't even want to pay a nickel if I can get out at 2 cents. HTHT, 45 and change. Looks like an ADR the way it gaps. Burl, I did 135 naked. Look at that, $10 below this. So this one I'm bidding a nickel to close. Futu, this I said yesterday would have been a good pattern if it took out this red bar, but now it's gapping lower, so I'm not gonna mess with it. Chinese hotel, all right, thanks, Patrick. Pro gapping up, bullish. Oil, 30-minute high, maybe. Bottoming pattern, Whiskey Bravo, put spread if there's any juice. Wolf, dog store. Now see, Alex, this is another perfect example. This is not a climb up. This is steady liquidation parallel with the 20. It doesn't mean it couldn't be a tradable short-term low, but I would just call it, kind of exhaustion gap or whatever. But I'll watch that, see if I can sell a 1DTE put. OSIS, yesterday we did MT Live on trading ranges. This is a sloppy range right here. 123 to 115. But I don't see anything to do with it. Yeah, Greg just posted the link there. Opera, this is the Opera House. No pattern, Hain. You know me, when there's no volume, I don't trust it. Wow, Greg, you're Algin rocked here. We were talking about a put spread on Tuesday. And then yesterday, I also said it was a directional. That is a double bottom, new low plus at the 50. That's a beautiful pattern right there. Boeing here, it was down bigger last night. It was down like 11. Now it's down 6. They're having some issues with that 737. They said, SPR is one of their big suppliers. It's some of the parts aren't matching up properly. Parts ain't going together, kind of like Legoland. That's not a good sign if you're flying an airplane. All right, Roku, we entered a third lot yesterday and sold a put spread. That looks great. Fuselage, all right, thanks. This one, Hilton Hotel, Alex. It's way underperforming Marriott. But, we always talk in the green room about, well, what if it did X? So I have an alarm. So it's Thursday, near Tuesday's high. Why? Well, because then this will be a double bottom, new low plus, and I'll sell a put spread on it. Now the fly in the ointment is it's a bearish weekly, monthly, but we're traders. If I'm in it 3 days, then so be it. Alex, Sam, I am likes your Berkshire here. It's a sloppy buy setup, deep retracement, but we on new longs, we got to start being cautious about is the tide, is the broader market, whatever analogy, are we out of oomph here, being up 4 days? So that's what would concern me about buying a Berkshire. I would do it if it were the original turn, because then I would say we have oomph to go. Remember on this day, I said my bias is to bounce for 2 to 4 days and see how far we get. Playing out like a fine-tuned piano so far. And then I said after that, once we get a reversal, I'm going to see how far we retrace down. All right, Mr. Big, I was just watching with, the Dollar Tree as a competitor. And Dollar General looks horrible. Horrible. Weekly chart, it looks like it's a magnet to these prior lows. So that's a call spread candidate. Estee Lauder, actually, you know what? It got a downgrade. I just shake my head on these freaking idiots. Why not give a downgrade here on this gap down? So this thing's gone from $205 to 150, and now I'm downgrading it. Oh, you're a genius. So I'm a contrarian, and because it's down so much, I'm going to watch it as a possible bottom. Let me set an alarm. 152.50. You know what? Talking about idiots and upgrading on earnings gaps, I wonder if somebody wants to tell me, either now or later, how many upgrades NVIDIA gets. I would love to know that answer just for the fun of it. Things rallied from 180 to 500. Oh, yeah. Yeah. Now strong buy. Yeah. Idiots. All right. I think there was some news with Cliff Clavin. trying to buy X. That's what caused this gap up. So gapping down here, this will be a call spread candidate. A, B, and W. I think had earnings too, but no pattern. Zero we looked at. A Groupon I saw ripping here pre-market for some reason. Look at this igniting bar. I don't remember, but I don't know. Was that earnings or what? But that's Groupon's coming out of the graveyard. And I saw AMC going by the ticker. This obviously had a reverse stock split, because the other day I remember this at around $2. And since it gapped up to 40, that tells me it's what, a 20 for one reverse, or 10 for one. I'm sorry, 10 for one. 240, 20 for one inverse split. This Climo H kits is a gap and crap candidate. Gap and crap. Miss soon is a AI stock. So with all the news on NVIDIA and so forth, this is a pattern for a breakout. We'll watch. AMD 180 reversal. Gapping up here, buy setup pre-market. This could set up for 1 or 10. But it went from 2 to 40. Unless it was at $4. And my recollection's wrong, but all right, thanks. To answer your question on the video, you mean the number of upgrades? I don't see your answer though. This is a day trade setup. Nice gap, buy setup, gap fill, bottoming tail, 180 daily. And that would be a great 1 DTE put spread if there's juice. Carvana here, look, we remember our MT live on the turn. This is a beautiful turn on support, 50 MA. Your entry is over the red bar. So I got an alarm up. I got an alarm up there. All right, let's see what I got filled on. It was one of these earnings trades. All right, I got filled on my snow scrangle at 5 cents. So that was a home run trade. Sold it for $1.40. Nice trade there. All right, Carvana alarm going off. Let me put Carvana here because I like it. TJX up alarm. This we have call options. So let's move stop tighter at break even, 89.22. That expires tomorrow. The 88 calls. TJX. All right, let's film. Okay. First. All right, NVIDIA is selling off, which does